Hello, listeners. Welcome to this episode of Cryptonomics. Before we jump into today's discussion, please keep in mind this recording is for general education and is not intended to constitute investment advice. Any opinions expressed are those of the participants and do not necessarily represent those of Witham. Hello, everyone, and welcome back to another episode of Cryptonomics brought to you by Witham. As always, I am your host, Mark Eckerly, and today I welcome to the show Sam Leichman, blockchain practice lead at Propeller Industries. Welcome to the show today, Sam.
Thanks, Mark. Thank you very much for having me.
Of course, appreciate you joining us. The one question I always like to start with all of our guests is their crypto journey, the rabbit hole experience, kind of how you got interested in this space and what kind of propelled your career in this direction. So why don't you tell us a little bit about that, as well as background on Propeller?
Sure. And maybe taking the last piece first, Propeller was founded about 17 years ago, really with the intent of providing a full stack service of CFO down to staff accounting for VC-backed startups. Really, you look at a seed, Series A, and sometimes Series B. Those teams should be focused on building, selling, and scaling, not necessarily having a perfect instance of QuickBooks. And while it's great to have a CFO around, there's just not really 40 hours a week of work to be had at those points in those organizations. I joined Propeller a little over 6 years ago in our SaaS practice, and very fortuitously was assigned Solana Labs as a client who at the time was in testnet. And, really, as I unpacked their business model, really recognized, what, Web3 was, the potential Web3 had for, not just a kind of a niche technology, but just something that was going to be transformative. And, from a finance and accounting perspective, realized very early on that in addition to the finance and accounting work we're doing for all of our other clients at Propeller, there was going to be this kind of second order of crypto finance and crypto accounting. More specifically, how do you take on-chain activity and translate that to the P&L, and then for US GAAP, and then when you think about the balance sheet, how do you first make sure that you're reporting accurately per US GAAP the digital assets that are sitting on your balance sheet. But I'd say maybe more importantly, how do you make sense of that? I'm sure we're going to get into a little bit of that later in the podcast. But yeah, very, very quickly realized that this was this kind of coming exciting technology. Propeller had been around for a good number of years prior to our work in the space. And, my outlook right now, we've got about 60 clients in, call it either crypto native or blockchain related businesses, but we've got another 300 clients in SaaS and CPG. And it's my thesis that in 5 years, every one of them is going to have exposure to blockchain technology. And it could be payments, it could be some sort of loyalty programs, everything that I'm sure folks who listen to this podcast are, the technology that can be unlocked with decentralized computing. And so, yeah, I came for just this exciting, these opportunities. And, now it's not just let's play within our walled gardens. I think it is, this is going to be truly transformative. I know we said earlier that we weren't going to talk politics, but I do think that with the coming regulatory unlocks, again, there was a Coinbase study that I'm gonna not be good with my stats on this one, but something like 70% of Fortune 500 execs surveyed thought that stablecoins were going to be are looking seriously at stablecoins as payments. Some number in the 80s are looking at some kind of tokenized project. So yeah, kind of came because I think the technology is just so exciting. And, stayed because I think it is, this is not just going to be a crypto native endeavor. I think this is the opportunities are really, really pretty broad and super exciting now.
Yeah, and we see all the time traditional tech companies, like you mentioned, of your SaaS core business model, asking those questions about stablecoins, asking those questions about, okay, if I want to accept it from vendors or I want to move it onto the balance sheet, just a very small, minute amount, as part of an investment thesis after a raise, whatever methodology would come about, we're starting to see those questions from non-crypto companies to your traditional tech companies. So we're starting to bridge the gap between the two. And it's just going to open the doors to folks like you and I on the accounting side to have that leg up of already having that expertise, understanding digital assets, understanding this new asset class and how to interact with it, how to transact with it, understand the inner workings of the technology itself.
Yeah, I think there is. I'm going to double click on that because I'm sure these are questions that you're hitting as well. But there is the on-chain the accounting for on-chain assets, but I think I think RWA is an easy term to lean into, but it's really tokenizing off-chain assets, tokenizing financial assets. But, I think you're now not just faced with the question of how do you account for it, that just this one section on the balance sheet of other assets, but now I think we are going to be seeing tokens appear all over the balance sheet, PP&E, a variety of other places, where the token is just representing something else and it needs to be accounted for like that's something else. And then, I think we're, again, to geek out from an accounting perspective for a second, it's like, okay, a fractionalized whatever belongs maybe in how that should be accounted for. But what happens when you begin to make it composable or programmable and all of a sudden the thing isn't the thing anymore? And again, these are the questions that scare the crap out of most accountants, but I think attract the folks that have, really embraced the space. It's just this is what makes it fun.
Yeah, it keeps us coming back for more. And I think part of that bridge, and what I really want today's episode to focus on, is one of the exciting projects that you and the team Propeller, as well as other contributors, have been working on for the space as a whole. So, can you tell us a little bit about what this statement of digital assets is? The SOTA term that we'll be throwing out. Tell us what it is, its origin, and kind of how you envision this should be incorporated into the legacy current financial reporting packages of a balance sheet, statement of operations, a cash flow, statement of stockholders' equity, right? Those four core statements that companies expect to get when they have audited, when they're getting monthly or quarterly financial packages. So if you could dive into a little bit about that, that's where I'm excited about.
Sure. And I think again, I like how you started the podcast talking about origin stories, because I think this industry in general is built on narratives, and I think that's what makes a lot of it really fun. But I think about how did we get to soda? It really started as it was probably our most beefy client at the time that had 3 to 5 million transactions a month hitting the P&L. Luckily, the balance sheet was one digital asset class, but and a lot of it, but a range from, call it, I'm just going to make up some numbers here, that was acquired from 500 to 4,000. And every week we would do a flash report for them. And the view was wallet, asset, quantity. They didn't care about book value. They wanted to know what was the liquidity and, how did that speak to the treasury. And so we got to really our first gap close, and I was reviewing it with my internal controller, and I was like, "Yeah, that number is wrong." I know that we discussed, and again, making up numbers here, but on our weekly calls, we talk about 10 to 12 million dollars of value at current market rates, and I know that's the number that our client thinks about. And of course, you get under the hood, you look at the subledger. It's like, no, this is the book value. This is here are all the reconciliations. Here's their, here's where it was acquired. What did some impairment, and that's the right number. But we were showing like $3 or $4 million, and I'm like, all right, well, sure enough, going through the numbers with the client the next day, it was like, yeah, that number's wrong. And it's like, no, it's right. Let's take you under the hood. And, by the way, getting under the hood in a subledger is not, for a non-accountant, is not a pleasurable experience. But, his eyes glazed over. It's like, look, you guys know this stuff. I'm sure. Fine. There's some, you're telling me about this indefinite lived intangible asset thing. I don't know what that means, but fine. U.S. GAAP makes no sense for this, but let's just move forward. We know we know how to run the business. And so got to thinking that, next iteration, we knew how operators looked at their treasury, and it is at the wallet level, it's at the asset level, and they want to know what the fair market value is. But it's like I felt like a little bit like I was back in like fifth grade where I had to show my work. And so I just basically took kind of this flash report that we were delivering and said, okay, well, here's the math that gets you to that $4 million, even though the the current market value is 12 million or 10 million, whatever the number he knew in his head, and the simple math that he was able to do to say price of asset times quantity of holdings is equal to, that's what my treasury is. And I think for a hot second at Propeller, we thought that we had something that was like some kind of secret sauce. This is really unique to, we're gonna build a moat around this. And bottom line is, I think it's, Mark, I've known you for 4 years, maybe 5. I don't know. It's like, there's this phenomenal ethos in this industry where I think there's this great conversations with, folks that do, related stuff. There's folks that do exactly what you do, but I think everybody is pretty open about, I guess, wanting to just get to the right answer. And very quickly, look, everybody was doing something kind of similar in terms of how do you rationalize what's on the balance sheet. And not only was it from an operational perspective, which is obviously our lens, but we started having conversations with leaders in crypto audit, crypto tax, like yourself, the venture community. And, this approach really, sort of symbolized a way that everybody was like, yeah, that has real relevance, for audit prep, for tax prep at the end of the year when, VCs have their information rights due. Look, GAAP is the language of business. And, I think as this industry is growing up, we need to be talking about things in terms of GAAP, and really the relevance of, I think, what we're doing, number one, had touched all of these other parts of professional services, the investment community, and other operators. That I think we realized very quickly that this is something that should be open sourced. I think it was very much aligned with the ethos of the industry, and I think there was the sense of, let's create a kind of a public benefit collaboration where we're going to put this down in a white paper and talk about, what is the thing, what are the use cases, and really just promote it as a best practice for the industry. And we've got incredible support. A16Z, Delphi Ventures, OP Labs, Masari. There are two big fours that we are in the midst of their policy committee for getting full attribution and naming on. But no, but it's really has served as this, just a tool that I think has relevance for all these different areas. And I'm sorry, Mark, you're going to kick me under the table for saying this, but for non CPAs, the easiest way to describe where this fits into the whole thing is it's a fourth financial statement. I know it's a fifth, but people don't really get that. But it really is a supporting schedule for a US GAAP package. And I think that, it's a start that says, how do you bridge, what you have to be reporting per US GAAP, which, I think you've got, the rules prior to ASU 2023.08 did not make it very clear of what was on the balance sheet. I think the FASB update made it. I think it's a step in a great direction, but it's still, to look at a US GAAP balance sheet doesn't make a whole lot of sense. And so this is a way just really to put it all out there and make this a usable, make the balance sheet better accessible and more usable for parties that want to understand what is the impact of digital assets to an entity. And one last point too, I think we got into this writing about it, not just from, yes, my client base, we're working with about 60 projects at Propeller right now. Everybody, this is kind of all we do. But I think that there is a reality that in, the next 5 years, it's not just going to be about people who are serving as CFOs for Web3 projects. It's going to be the Web 1s, the Web 2s. Any CFO who is working in the space needs to be able to have a way to really understand what is on the balance sheet. And, I think that if you can't account for it, you're going to have a really hard time having a CFO who is not crypto native being willing to transact with it.
Yeah, and I think the important thing that you hit on there was the legacy framework and reporting for digital assets and the ultimate presentation on the balance sheet was not indicative of a company's financial position. And I think that hurt a lot of companies from a presentation point of view when you were reflecting that to investors if you're a public company or to your board, because you'd almost always have to have some type of narrative supporting that of, okay, well, here's our actual value of digital assets, a treasury that we're sitting on. If we need to go and pay vendors, pay employees, liquidate for cash. So I think this statement, replacing that, painting that clearer picture to management, to the board of directors, to potential public investors or future investors, is paramount to the digital asset industry. Now, I do agree. I think the rollout of the new FASB standard does present the balance sheet in a much cleaner and more accurate format. But I think seeing the breakout, like you would with the cash flow statement, of all the activity instead of just grouping everything on a cash flow for non-cash digital asset activity, not really knowing what's being packed into that number. I think breaking that out in a readable format in a statement that is similar to current framework, right? So it's like the back of our hand for you and I in the accounting world. We know how to do balance sheets, P&Ls, statement of cash flows. It's just going to go such a long way for the industry and those companies that are both in crypto and those companies that are going to be in crypto in the future.
Absolutely. And just to also double click, and again, this is sort of the fun challenge that I think the ASU presents. You now have, and this is the way we set up the chart of accounts for our clients. Under digital assets, you've got a bucket for fair value reporting, bucket for low of cost or impaired value, book value. And then, although nobody wants to, have this conversation, stablecoins, because they're not cash. They don't belong in cash yet. We'll see what a stablecoin bill tells us. But, all of a sudden you have these three pretty different types of assets from an accounting perspective. And even to look at your fair value assets, it's not telling you what is your cost base and what is kind of an underlying tax liability that you're going to be on the hook for when you get rid of it. Obviously, you look at your what you're valuing at book value, that could be a native token, which we've seen, in the billions, but sitting on the book at a zero cost basis. And then you've got your stablecoins, which, is from from a startup lens, while you can't account for it as cash, you have to be able to think about that as how does that inform your runway? And, in no way, shape, or form do we ever say, hey, take a look at whatever your treasury is in terms of total digital assets at fair value, and then divide your monthly run rate of cash expenses, and that's your runway. It's not a very responsible way to be a finance practitioner. So, but we are very comfortable saying if you're sitting on X millions of stablecoins, that does speak to your runway. I think it also, blowing out the detail behind the digital assets speaks to another thing as well, and that is, and I've said this on other panels and whatnot. But you get 5 crypto CFOs in a room and ask them what treasury, the definition of treasury, you're going to get 9 different answers. And I think that it is, my perspective, treasury is just having a full picture of real liquidity. And I think one of the things that Soda does is not only does it put everything out there in terms of being able to understand book value, fair value, and your entire portfolio, but we also include the opportunity to assign roles. And that's a very, again, this is not this is not a software program. This ends up in Excel, and it really, it's very bespoke to how you are running your organization. But all of a sudden you start thinking about, okay, well, you have ops and admin wallets, you have treasury wallets, you have every purpose that you are using digital assets for can and should be tagged. And I think this gets into some interesting opportunities with the IRS RevProc and the necessity now also to be basically running your tax calculations at the wallet level. But I think importantly from an ops perspective, this concept of wallet hygiene and being able to say, look, it's a lot harder to set up a bank account than it is to spin up a wallet. And as a result, when we get involved with engagements, it's in some cases a dumpster fire, and nobody's there's intermingling funds. You ask other folks who do what we do, and how often do you or have you ever seen clients that don't share all their wallets, not in any sense of trying to not do do something bad, but it's just all of a sudden you've got Jim from engineering has been messing around with this, and there's $1 million in Ethereum that we forgot to tell you about. And so this also gives you a sense of saying, okay, let's think about your wallet infrastructure, think about wallet hygiene. And then I don't know if we'll have time to get into some of the tax stuff that's coming out with the recent IRS RevProc, but you do need to be responsible for tracking at the wallet level your cost basis for the 1099 DA rules and the broker rules coming up.
Yeah, the one path I wanted to go down a little further that you started to allude to was for the creation of this new statement for Soda. So 2 things I wanted to push back to you on were, one, if I were a CFO, if I were a controller, how would I go about creating this new statement, right? Because you mentioned in Excel, right? So kind of want to make sure we're explaining to listeners how to bridge the gap of, one, creating this new statement, but 2, how does this interact or speak to your current ERP? And when I say ERP, that could mean both your general accounting software, your NetSuite, your QuickBooks, your Zeros, as well as your subledger crypto software, whether it's Cryptio, Bitwave, what have you, which both kind of commingle each other. But I'm curious how, at the end result, at the end of the day, you would get this new statement. Can you talk through that a little bit?
Yeah, and I think again, it all goes back to sort of let's start with the origin story. But look, it started out with, okay, subledger. I don't think that any business like Propeller, blockchain, or I'm not going to mention my competitors by name, but you know who they are. But anyone who's doing what we're doing could not do what we do without a subledger. Basically, a tool that takes that tracks the on-chain activity and essentially serves up journal entries for your general ledger, your QuickBooks, and NetSuites. And I think and by the way, we were doing this work before we had subledger technology to work with. I shudder to think about some of the early spreadsheets that we were heavily relying on, but you make do with what you have in front of you. But I think at the most basic level, when we started putting this together, it was all of these data points are available within the subledgers. So, it starts out with the equivalent of a balance report, which has your at the wallet level, what are the assets in there? What's the quantity of assets? And again, I think it's the nature of the business. People care about what is the fair value. So, they would have some sort of pricing mechanism they'd pull in. It gets a little bit trickier when they're looking at NFTs, but put that to the side. And then you would, again, what is the least sexy part of probably the subledger was, tracking your cost basis and figuring out what is, what either by wallet. Early on, it was that was challenging for all the subledgers, but there was a different report. They would be pulling your. It was a tax runner in Bitwave originally. Everyone had their own variety, and we started by just saying, okay, you take one report which gives you, the wallet infrastructure, quantity, asset type, and fair value. You take another report which gives you your cost basis, and you put it together. And I think it's downstream after the books have been closed, after the wallets have been reconciled, and you're using a source of truth that is already informing the financials. So this is the whole point: is how do you tie this out? I mean, again, back to the origin story, we started out with a number that we needed to tie out to. And so we basically just went back to the subledger, which was Bitwave in the example that I brought up originally. And we said, okay, well, all of this is coming from this one source of truth. Let's just kind of pull from a couple of different reports to make it, basically, again, the whole point initially was to show our work. And so that was, so it's really just pulling the select reports from the subledgers. I think that, look, at Propeller, we are platform agnostic. We work with Bitwave, Cryptio, Integral, Trace, CryptoWorth, and I'm sure I'm leaving somebody out, and I apologize to whoever that may be. But look, at the end of the day, we could not do our job. No operational accountant can do their job without the use of the subledger. And I guess what I'm excited to kind of maybe lean into a little bit is, as we have begun to really focus on SOTA, and again, I think this could only exist if it was a collaborative effort. We've got an incredible buy-in from the leaders of the subledger firms, and so I believe Bitwave has rolled out a SOTA report. Cryptio is, if it hasn't rolled out yet, it is rolling out. I've gotten verbal commitments from Integral, from CryptoWorth, from Trace, and to be very clear, this is a SOTA report. This is not something that is SOTA by Propeller or SOTA by EY or SOTA by Deloitte. This is SOTA. This is a public domain, a standard that we want to be able to be, again, just adopted. There's no commercial kind of let's really kind of think about it, then we're going to start charging for it. There's no freemium model that we're it's in the back of our head. This is, again, I've got other outsourced accounting providers that have contributed to this project. We've had 2 Big Four contribute to this project. We've had multiple VCs contribute to this project. So ultimately, it comes down to the subledger. And in terms of assembling this, right now, we are very close to basically just going to the canned reports, and have to come up with a good joke because it's a canned SOTA report. But come back for the late show. What we're working towards with these subledger partners is the ability to have a drop down, and again, all of whenever I explain SOTA for the first time to a subledger, they're like, well, we're already doing all that. I'm like, well, you're not doing it in a way that operators can just say, I want this, and this is exactly how I want to look at it. And again, I don't think that what we've put together is necessarily rocket science. I think it's just a rational way to make sense of digital assets through a gap lens and through an operator's lens.
Mm-hmm. And you mentioned it's a public domain. Can you give our listeners the site so that we can go and endorse it? Because I think, getting as much traction, getting as much endorsement, following, more the merrier.
Yeah, no, Mark, thanks for bringing that up. Yeah, so look, I think, again, we started by just wanting to put this out into the industry, making it be a useful tool. First, our V1 came out August of last year, and then the ASU kind of kind of forced us to sort of rethink, some of how we were approaching things. So we came out with a V2. And, as we, have been working on these white papers, and there is a white paper that you can download at sodafinance.xyz. Sorry, that was your question. I'm not getting directly to it, but we came out with these white papers. It was like, all right, well, what else can we be doing? And part of that is saying, okay, well, when we think about what does maybe a V3 look like, is we want leaders from this industry, whether they be CFOs, controllers, professional service providers like you and I, investors from the venture community, to go, and we're accepting endorsements. As you mentioned, you go to the website, you go to endorse, and basically it's saying that when we roll out our V3, we're going to have a slate of leaders from a finance and accounting perspective who, it's not saying that this white paper is a work of art or anything beyond the idea that this core analysis, which is a schedule to a standard set of financials, is a good idea. That we're endorsing this to say, hey, this makes sense. And I think that, what we're really aiming for is, we have had conversations with AICPA, look, wherever it ends up from an official accounting perspective, I'm excited. But I think the reality is, again, there is a opportunity for us to create the best practice for this industry. And I think that's really, my goal with the project.
No, and I think it's got a bright future. I'm excited to see this as, like you said, V1, V2, but laying the foundation for what's going to be essential for crypto companies and their reporting requirements. I think this has a bright future. I'm excited to see how this is going to be rolled out, and I'll be the first in line to continue endorsing this project. So, Sam, it was a pleasure having you on today's episode. Where can folks go to learn more about yourself and Propeller?
So find me on LinkedIn. It's Sam Leichman, Leichman. I post a lot about soda, but please DM me there. Our website is propellerindustries.com. My email is first initial last name at propellerindustries.com. But LinkedIn is probably the easiest path.
Awesome.
Great.
Awesome. And with that, wrap up another episode of Cryptonomics. Thank you, everyone.
Thanks, Mark.
All views expressed in this podcast by Mark Eckerly or his guests are solely their opinions and do not reflect the opinion of Witham. This podcast is for informational purposes only.